So welcome back to part 2 of liquidity, which is, as I said, really important. So I will make multiple parts and multiple examples. So maybe you get the liquidity after the series, but there's still stuff to master in liquidity. So you won't 100% get it, but you will get like the basics of it, okay? After that, it's just market experience. But before that, I want to show you something I worked on this weekend. So this was the Discord I was working on, and we're actually hosting a giveaway just for the start of the Discord. I really want to grow it now. And if you want to join, you can learn a lot from trading. Here are people that are funded, and me as well. I will be answering every question. But if you want to participate in the giveaway, it will end on January 14th. So just join the server, link is in the description, and see you there. So we're in the charts now, and if you didn't watch part 1, you should really watch part 1 before that, because I won't be going over the really basics or the definition of liquidity. I will be showing examples and different types of liquidity that there are. So we're just gonna go straight in. I told you last time that, for example, at these lows, we see there's two bounces, it gets swept, return direction. As you can see here, it read really well, and also the opposite way here. The thing is, there are points that are more important for liquidity and there are points that are less important for liquidity. As I said last time, the bounces are really good, but they're also, for example, this would be a good liquidity just because it's a spike kind of. You know, the price wasn't there in the last time, but spiked up there. So there, and on this point it reversed, and it also matches with this, but just the spike already makes a good liquidity, and it gets swept really well here, as you can see. Wick up, instantly down, so there was impulsive move up, impulsive move down. If you get candles, you should notice, and why it looks like this. And then it completely went down, took this liquidity, and went up again. Maybe took this liquidity and went down again. You see that the market gets moved by liquidity a lot. And here again, liquidity spike here, gets swept, and we go up. It went into this order block, but you don't know order blocks yet. But it went into the order block and it went up. So market is really moved by liquidity all the time, and that's why liquidity is so fucking important in trading. And there's also simple liquidity. Obviously you can see it like this, but there's also simple liquidity. If we mark our times, I have German times, you have to change it to your times. Just look up German times or look up session times, but basically what sessions are is, for example, this is 9 a.m. at my place, but in London it's 8 a.m. there, and this is called the open because a lot of people trade there, so there's a lot of volume. If there's a lot of volume of retail traders, there will be a lot of liquidity. So what does the market do? It hunts for the nearest liquidity that it can find. Here, there's a really good liquidity down there because this is Asia. No, this is London, sorry. This was Asia, all the way from here, Asia open to Asian close, and then there's London open, and this is New York open, okay? So this is London low, which is really good liquidity, and especially if it bounces on that level. But you could just take the low as a liquidity of London, for example, and the high as a liquidity of London, for example. And you see here, it bounced perfectly on this level, means it makes a really good liquidity now. So it will probably take it, maybe even take this, because this is also a good liquidity. As you can see here, two bounces. But this is just market experience, okay? I will show you it this way, but it's really hard to recognize at the beginning. You will get it after you like put in hours, you know? I had the same. It just clicks at some point. This is also good liquidity. And as you can see here, it's probably hunting for that liquidity. It took that liquidity, went into an order block, and now turns. And for what does it hunt? For the next liquidity. So just of that, with peg structure, as you can see here, we talked about peg structure, you could be trading this. So here, first take profit, and 1 to like 1-to-1 nearly risk reward, which is fine. Second TP down here, and this could already work. Obviously, it doesn't work 100% of the time, so this could also not work. But you see here, it took liquidity, and we won. Bro, it's not that hard, okay? And you're just at the beginning, you're just at the start of liquidity. If you master the other concepts, you will be making money with trading if you follow your plan and follow the things I teach you or other people teach you. Because that shit works. You see it. You see it. Another time, here. Took liquidity. Like this could have made you thousands of euros with the right amount of, with the right conto. And it's not that hard. You recognize the London high, it swept the London high, made the break of structure, you went in, make the stop loss above this. And it worked out, bro. It's really not that hard. just learn trading, and master your emotions, which is really important with what I struggle with as well. But I'm really trying my best to master this. And yeah, you could be making a lot of money just from this concept already. Just sweep of the high from the last session into breaker structure. You could be trading this. To be honest, just go into the charts and see how often it works that it sweeps the last session. So if you trade New York Open, London Open High or London Open Low, here it sweeps it, breaker structure 5 minute, and you aim for the downside of the upside if it sweeps the low. Okay, so wait, I'm gonna draw it real quick. You could be trading. Oh wait, I have to change the colors. You could be trading this. So this is Asia, for example. This is the high of Asia. Let's say this is New York Open and this is Asia Open. This is the high, and wait, I'm gonna make it a little bit better. Like this, okay. So this is the high and this is the low. Easy. You just mark it out. You see a sweep, you wait for a breaker structure in 5 minutes. Normally you could also wait for a fair value gap retracing, but you don't know that. Oh, why is my chart so weird right now? What? Okay, but you don't know fair value gap yet. But you could just sweep off that low, a good sweep, a really good sweep, like a sweep like this, where you see the wick goes up and instantly down again. So this really looks like a sweep into a break of structure in 5 minutes. Here, let's say this, stop loss here, aim for that high, and you already have a profitable strat if you just follow your plan all the time. It's really not that hard, and I will be making another part about liquidity. Since it's like New Year and shit, I really have a lot to do. Sorry for not uploading 2 times like a day on the weekend because I was at my father's house. I had to pre-record every video, and I have like 1 hour to make the thumbnail and cut this video. Normally I take 2 hours, so I really have to do my best to make it as fast as possible. I hope you liked the video anyways, and leave a subscribe and follow my Discord, follow my Instagram and join my Discord. I will be there daily and you can ask me anything, every question you have, and yeah, see you. Bye bye.